Welcome to the ins and outs to navigate AgriStability. Thank you for joining us. What we're going to cover today is we're going to give you an introduction to the AgriStability program. We're going to talk about why participation could be beneficial for your operation. We'll also explain how the AgriStability program works and the calculation itself. And then we're going to go through some examples of completing out some of the program forms. And then we'll close it up with reviewing the calculation of benefits statement, which is the final statement that you will be receiving. So what is AgriStability? It's a national program covered under the Sustainable Canadian Agricultural Partnership Agreement on agriculture policy. So it's a 5-year federal, provincial, and territorial funding agreement that's effective April of 2023 through to March of 2028. And it governs the business risk management suite of programs like crop insurance, AgriStability, livestock price insurance, and AgriInvest. It's cost effective. It's designed to help farm operations that could face those large declines in profitability caused by a loss of production, if your costs are increasing, or if the market conditions start to decrease. And coverage is personalized for each farm operation. We use your own history, and it's based on your income tax and your supplemental information that you submit to us. So why participate in AgriStability? It's as I mentioned, it's very affordable. The program fee is cost effective. This is based on 2021 data, but the average cost to participate for Saskatchewan producers was 69 cents per acre or $1.19 per head of livestock. If you do receive a payment from the AgriStability program, it does not affect your future fees. And it gives you that also the financial support to help offset large margin declines. So when your farm's in that disastrous situation, AgriStability could provide that benefit for you. It's very personalized coverage. It's based on your farm's history. Every one of your operations is unique and looked at individually. Your coverage for AgriStability is based on what happens specifically on your operation, not on operations in your surrounding area or other areas within the province. And it also gives you access to credit options and programs. So you can use AgriStability as security for like the cash advance program. Maybe your bank might be requesting AgriStability calculation benefits for any loans or lines of credit that you're accessing. Also, we want to just bring to your attention something new for the 2024 program year that came in, is we're moving up the deadline for the forms submission. So it's being moved to June 30th of 2025. By doing this, the work on your files begins earlier in the year and applications can be processed quicker. So that gives us, AgriStability, the ability to pay you producers sooner when you're in that benefit situation. It also helps put it at a time that's not during the busy fall period and aligns with the AgriStability form submissions with the farm tax filing. The final deadline to submit your program forms is September 30th of 2025 with a penalty. The penalty remains at $500 per month for every month the form submission is delayed beyond that 30th of June date. So it's a maximum of $1,500 penalty. And please note that the penalty is only applied if the producer receives a benefit. So what does the AgriStability program cover? So it's designed to help your farm operation that could have that large decline in your margin. So it can be one or a combination of factors like, losses due to adverse weather conditions, a loss of your inventory, your costs are increasing, those commodity markets have dropped. Maybe you have grain in storage that spoils or heats on you. That's also covered, and a decrease in your production of your livestock and crops. There are some specific requirements that you need to meet in order to participate into the AgriStability program. The first off is you need to be filing farm income or loss to the Canada Revenue Agency. You have to complete a minimum of 6 consecutive months of farming activity and a production cycle. Please note, though, if you experience a disaster, like if you're not able to complete a production cycle due to that severe drought or excess moisture, for example, then this condition may be waived. You also have to be submitting your program forms and pay those program fees by the specific deadlines. The forms deadline, like mentioned earlier, is June 30th without any penalty and September 30th with penalty. And fees, they're usually due April 30th for anyone who is existing in the program right now. The enrollment notice fee get generated in February and will be mailed out to you. Anyone who is new in participation and joining the program, you will have 30 days after your enrollment notice is issued to pay that fee without any penalty. After those 30 days, then the penalty is assessed, and it's a 20% penalty that is added to the fee amount. And then the final requirement is you need to be deriving your income from the primary production of agricultural commodities like grain, honey, livestock. So how to enroll? It's very easy to start that process. The deadline to apply for the 2025 program year is April 30th. When you call in to enroll, you'll need to provide some information. We'll just take your intentions, what you will be intending to seed, or the type of livestock or forage that you might be having for this production cycle in 2025. It just helps us determine the size of your operation to base the fee upon. And normally takes only like 5 to 10 minutes for the phone call, and we will get you enrolled. So once you are enrolled, then you will have to be providing your historical information if you have some farming history, because the AgriStability program uses the previous 5 years of history to do the margin calculation. And we need to build that reference margin history. So that's kind of the homework portion of what you will be needing to do, is to get us that history. For those participants that are new to AgriStability or returning maybe after a break of over 4 years, you have the option to submit either 3 or 5 years of historical information. So simplified participation is you just submit 3 years of history. It's a little bit easier, and to do that, you don't have as much paperwork and information to dig through. Standard participation, you could submit the full 5 years of history. So just keep in mind, the 3 prior years is easy to submit, and maybe those were really good years, and that could help your reference margin. However, if those 3 previous years weren't so good, you might consider and want to submit all 5 years of history just to bring up your coverage for that reference margin. So now we're going to get into how the AgriStability program works. The calculation and the different margins that we talked about earlier. So it is a margin-based program, and it's basically a way of looking at the financial success of a farm in a given fiscal year. So it's more than income and minus expenses. There's other factors that help determine that financial performance and how it compares to the historical performance of that farm. So AgriStability does use 2 different margins in the calculation. We use, first off, the program year margin and the reference margin. So the program year margin, that is the current year's financial profile for your farm or ranch. It's based on the income and expenses that are directly related to the farming operation and includes accrual adjustments. So this is the year that we will calculate to determine if you're going to be in a benefit or not, that program year. The accrual adjustments measure changes in your inventory valuation, if there's any receivables, payables, and purchased inputs. And again, we'll get into detail about these later on in the presentation. The second margin is the reference margin. That is made up of your previous 5 years of history. We use the Olympic average, so we drop the lowest year and the highest year, and the remaining 3 years are averaged to come up with your reference margin number. To trigger a benefit, the program year margin needs to drop by 30% compared to the reference year margin. And once you're in a benefit, you'll be compensated at 80 cents on the dollar. So this is an example of a program year margin calculation. This producer has allowable income of $200,000 with the allowable expenses at $100,000. There was a few accrual adjustments. The crop inventory valuation decreased by $50,000 throughout the program year, and the accounts receivable deferred income increased by $50,000. The purchased inputs, prepaids, decreased by $40,000. So the program year margin came in at $60,000. The allowable income of 200 minus 100 for the expenses plus these accrual adjustments to come up to the $60,000. So to determine if you're in a benefit or not, we compare the program year margin to your history. That's your previous 5 years. This producer has the full 5 years of history. Again, it's the Olympic average. So year 1 and year 5 were dropped because they were the low and the high years. And then year 2, 3, and 4 were all averaged to come up with an average reference margin of $150,000. Now, some things that could cause a margin to decrease is maybe you've got a lot more expenses, your crop inputs the prices of those have increased a lot. You have overall a lower amount of income. Maybe the commodity prices have dropped. Your actual production itself has decreased. So these are some things that can affect a margin negatively, and a decrease basically in a margin could put you closer to a benefit. On the flip side, what could cause a margin to increase? You've got less expenses, your actual income has gone up, you maybe have increased some purchased inputs, and your accounts payable maybe have dropped. So keep in mind, these might offset. So you might have an increase in an expense. You've put down some more pesticide, a few applications of that, but that doesn't necessarily mean you'll get a benefit, as you maybe could have had a bumper crop. Now, allowable income for program purposes includes income that's derived directly from the primary production of agricultural commodities. You've got crop insurance payments and any wildlife damage compensation payments that you get, that's pulled into the calculation as allowable income. Canada Food Inspection Agency payments and any rebates for the allowable expenses. Now, note if you receive payments from other programs like private hail insurance or global ag risk solutions, any benefit from those programs is not allowable income, but we will accept the premium expense for those programs as an allowable expense. And on the expense side of things, we've got commodity purchases such as seed and livestock. So you're buying that seed, maybe you're increasing your herd size and have bought some bred heifers. Your fuel, your freight and shipping, your vet fees, electricity. This is a list of the allowable expenses that get included. Now, the non-allowable expenses, basically that's all your capital costs. So the program didn't want to influence whether you rented or purchased land or rented or purchased equipment. So all these things are important to your farm, but they don't contribute directly to the production of your commodities. So AgriStability doesn't consider them. And to note also, all income and expenses that are related to farming activities that take place outside of Canada are non-allowable. So the AgriStability program, it's a cost-shared initiative between the federal and provincial governments. It's designed to support Canadian farmers and ranchers in the primary production of the agricultural commodities that are grown, harvested, raised, and sold here within Canada. So income and expenses are only part of the equation. We also look at the accrual adjustments, and that makes up an important part of the margins. So it's basically about us having a clear view of what happened on your farm from the beginning of the fiscal year to the end of the fiscal year. So AgriStability looks at 4 different types of accrual adjustments: inventory valuation, deferred income and accounts receivable, purchased inputs, prepaid expenses, and the last one is accounts payable, unpaid expenses. So the fair market values that were talked about, they're developed for commodities grown and produced in Saskatchewan, and SCIC uses the fair market values to price that inventory that you have on hand at the end of your fiscal year. So we collect that market data throughout the year from trusted sources such as Canfax for cattle and StatPub for grains and oilseeds. We collaborate with Agriculture and Agri-Food Canada, the provinces, Statistics Canada, and industry to gather the price data on commodities. They're calculated for each month of the year to accommodate for those corporations that have non-calendar year ends. And if you want to view the common fair market values that we collect, they are posted on our website, scic.ca, under published prices. So the second type of accrual adjustment is accounts receivable and deferred income. So we want to make sure that all the income related to that year's production is in the year that it was earned. So deferred income, that's income you've chosen to postpone the receipt of to a subsequent tax year. And accounts receivable is income owed to you, maybe for goods that you delivered or services that you provided in one fiscal year, but you're not paid for it until a subsequent tax year. So in this example here, this producer sold canola. He deferred receiving that income of $50,000 into the next tax year of 2023. And just to note, when you are reporting your ending deferred income, the amount that was sold, let's say this was 60 tons of canola, don't include that in your ending inventory. It's no longer stored on your farm, so make sure you don't include it at your ending inventory and the deferred income amount, because then you're doubling up, and we don't want to do that. The third accrual adjustment is purchased inputs and prepaid expenses. Those purchased inputs, the commodities you've bought, you still have on hand at the end of the year, and you're going to be using them in the next year. Any prepaid expenses, maybe you paid in advance for goods and services to be received in the future. You've paid for it, but you're not using it until next year. So we need to take those out of this year's margin and move it into next year's, because it's going to be next year's expenses. So some common ones are fuel, chemical. You're buying wheat seed. For example, in this description here, the producer bought some wheat, $25,000 worth. He does have a December 31st year end. Maybe he bought it in October. He's not going to be using it into the next following spring when he's going to be seeding it. And the last one here is accounts payable and unpaid expenses. If you've used the things in the current year, but you haven't paid for them yet, again, seed, chemical, fuel, they're common ones. We want to make sure that this expense is allocated to this current year's production. So the example here, the producer maybe hasn't paid for all of his fertilizer. He still owes $15,000 for that bill. And fuel bill, he still owes 10 grand to his local co-op for fuel that he used throughout this tax year. And just to note, do not include any amounts if you're purchasing them through loans, lines of credit, or credit cards. Don't include those amounts on as an accounts payable or unpaid expense. They're already captured on your expense side of things on your taxes. So just to recap the margin calculation, we've got the allowable income minus the allowable expenses, plus or minus those accrual adjustments that we talked about. So payments can be triggered by a combination of several factors that maybe on their own might not trigger a payment. And one situation may offset another. So a bumper crop could offset the effects of a poor commodity prices or those increased expenses. But we've got low yields if those cattle market prices drop, or you've got that increase in your crop input expenses. They all could trigger a benefit. Also, so from time to time, we want to touch on about your farm operation and the size. That may change. You might be expanding your acres, reducing your acres, maybe you're growing something new. This type of change is called a structure change. So when this occurs, your farming operations income and expenses will be different than what occurred in the past. So in essence, that historical reference margin isn't a good comparison anymore for the current program margin. So to provide a more accurate comparison, we adjust the farming operations reference margin to reflect the farm size and type as in the program year. So in this example here, we have year one, year two, where they are farming 1,000 acres. Slowly throughout the years, they're taking on more land and are now farming up to 5,000 acres. So the program margin for the program year isn't a good comparison anymore to that previous history. So we would structure change up year 1 through to year 4 as if they had been farming 5,000 acres in those previous years. And the reverse too, if you're decreasing your acres or decreasing your herd size, that we would call a structure change down. We would adjust that reference margin history down accordingly as well. So once we have your information, then the benefit calculation is completed, and this occurs so when the program year declines by more than 30% of the reference margin, then an AgriStability payment will be triggered. So in this example here, we have a full 5 years of history. We do the Olympic average. So year 2 and year 3 are dropped because of the year 2 is the low year 3 was the highest. The remaining 3 years are averaged, and they come up with and calculate out to the reference margin. So that's your reference margin history. So let's say in this example, the reference margin is $300,000. The trigger point, your program year margin has to drop by more than 30%. So the trigger point is 210,000. That's 70% of the $300,000. Let's say the program year margin came in at $200,000. So you're $10,000 below the trigger point of 210 grand. AgriStability would pay 80 cents on the dollar for that amount of decline. So an $8,000 benefit would be sent to the participant. We have a couple scenarios we're going to walk through. The first one here is a grain, oilseed, and pulse crop producer. He farms 8,000 acres of cropland. He had drought conditions, so he saw the reduced yields there in 2024. He sold more inventory than normal, and so combined with that lower production, it resulted in a substantial change in crop inventory from the previous year. The producer also was in crop insurance and received $250,000 from his crop insurance claim. So just walking through the calculation here for the chart on the left is specific to the program year. He had some carryover crop from 2023 that he sold in 2024, $700,000 worth, and then he also sold some crop from the 2024 crop year, 840 grand. 250,000 for his crop insurance payment, so total revenue comes in at 1.79 million. He has expenses of $810,000 and a couple accrual adjustments. His purchased inputs were down by 150,000, and that big change in inventory valuation from the start of his fiscal year to the end of his fiscal year was down by 690,000. So the program margin is the total revenue minus the total expenses plus these accrual adjustments. So the margin comes in at $140,000. Now the chart on the right is specific to the benefit calculation. So historically, the reference margin is 1.3 million. The trigger point to trigger a benefit is 70% of that reference margin. So that is $910,000. The program year margin came in at 140,000. So there was a decline of $770,000. AgriStability pays 80% of that decline. $616,000 is the amount of benefit that was sent to this producer. The second scenario here is a mixed farming operation. This producer has 1,000 crop acres, runs a 250 cow-calf operation, and has 500 acres of forage as well. Had drought in their area and some gopher damage, which reduced their yields. Both of those ended up reducing their yields. They sold more crop inventory than they normally would have. And again, combined with that lower production, they're going to have a substantial change in their crop inventory valuation. They were short of feed because of the drought, so they ended up selling all of their calves and feeders, and they also decreased their herd size. They ended up selling 50 cows in 2024. They were in crop insurance and received an $80,000 crop insurance benefit. So walking through their calculation, they had some carryover grain as well that they ended up selling, just $100,000. And 2024 crop sales, 55,000, plus all the livestock and cattle, calves and feeders and cows that they sold, 250,000, and their crop insurance payment of 80,000. So their total revenue came in at $485,000.
Their expenses for their fiscal year was $155,000, and they had a couple accrual adjustments as well. Their purchase inputs were down by $20,000, and that large change in inventory valuation of $300,000. So their 2024 program margin calculates out at $10,000. Total revenue minus the expenses plus the accrual adjustments. So then the chart on the right-hand side, determining whether they're in a benefit situation, comparing back to their reference margin. Historically, they have a $175,000 margin, and the trigger point for that is 70% of 175,000, so 122,500. The program margin of 10,000 is well below that, so they have a decline of $112,500. AgriStability payment 80 cents for every dollar of that decline, so a benefit payment of $90,000 was paid to this producer. So once you do enroll, the first thing you have access to is an interim benefit. Now this is optional. You don't need to apply for it, but it is an option for you to receive a portion of your AgriStability benefit early prior to your fiscal year end. So it's a way for us to get you cash sooner. It's calculated from an estimate of your final benefit. And because of it being based on an estimate, we pay 50% of the estimated benefit. You can apply for an interim anytime during the fiscal year, up to 90 days after your fiscal year end, and once a production cycle has been completed. So for 2024 program year, the deadline to complete an interim application is March 31st of 2025. Now, the remaining benefit amount is paid when we receive your final program year forms. That is still mandatory. You need to be submitting those. And then once that file is finalized based on your final numbers, any remaining benefit amount will be sent to you at that time. And just remember, it's your interim is based on estimated amounts, so it at times can result in an overpayment once your final benefit is calculated. So just note any overpayment must be repaid by the participant. So now we're going to show you some tools, worksheets and guides that you can use to assist with completing the program forms. The inventory check worksheet is just a tool. It's optional. We did mail them out in December of 2024, so hopefully you received yours. If not, you can access it here through our website. It's just a way for you to jot down your numbers that you had on hand for any kind of ending inventory, what you still have on farm, whether it's crop or livestock, and to make note of some of those accrual adjustments. It just gives you an area. You can list the crops, list your type of feed. Maybe you have alfalfa grass bales. What do you still have on farm as of the 31st of December if you're calendar year end? Types of livestock that you might have, and if you had any purchased inputs, accounts payable, or did defer any income, you can make note of what it was and the dollar amount. Again, it's just a tool for you to have those numbers handy so that you can transfer them over to the program forms when you complete your final program forms. Now we want to look at the home page of scic.ca. This is where you can come to find out all the information. Everything that's been talked about on this webinar can be found here. The green menu bar, the top third, these are all the programs that SCIC administers for Saskatchewan producers. We've got livestock price insurance, wildlife damage, crop insurance, and the AgriStability program. In the top right-hand corner, we have Ag Connect. That's the link to your AgriStability online portal. So once you are a participant in the AgriStability program, you can set this up and you can look at and access your information. You can submit your information to us through the Ag Connect portal. Crop Connect, that is specific to crop insurance. So if you do have a crop insurance contract, and you can also set up your online portal specific to that program. But we're going to look at the AgriStability program. Again, there's all the information we've talked about can be found here. Prices, we talked about the fair market value prices. You can look and see what those are calculated at, and program forms. So this is where I go to when I have a producer that wants to or needs a form. They are listed alphabetically, and I think there's about 4 pages, 4 different screens of forms. If there's a little blue question mark beside the form that you're looking at or worksheet or guide, that means that there's an example of the form and documents. If there's a little letter I, there's form instructions. There's a guide on how to complete that form. So again, they're alphabetical. We've got links here to the CRA if you need to access that website and the forms. Change business type. Maybe you are changing from an individual into a corporation or into a partnership. This form would need to be completed and let us know what the new business type is and submit that to us as well. Um, Crop inventory calculation worksheet, it has the little letter I, so there is a guide available for that one. One of the key ones that you can have beside you when you're going to be completing your forms is the commodity code guide. So I opened up the 2023 guide, and it provides you all the different codes that you are going to be needing to complete your form. Don't be overwhelmed by the 38 pages because it is a national program. So there's everything in here from strawberries to bison. But the first table of contents, that's your go-to. The commodity code list, that starts on page 5. And that is the code list specific to commodities that you are selling or buying. So if you are selling your canola, your wheat, your durum, you can find the codes there. If you're selling your calves or your feeders, you can also find them there. Maybe you're buying your canola seed. This is where you would go, is to look through this code list here. Now, inventory codes specific to what is still on farm at the end of your fiscal year, that can be found on page 10, and that's the start of the codes specific to the different crops, the different grades, the different types of livestock. Everything is listed there. Now, another worksheet that's available, and again, it's optional, but you can fill this out to help you come up with the ending inventory amount. I have in here an example of canola. I'm reporting it in tons. You can report it in bushels or tons, or just make note of it. 1,000 acres, I had 500 tons carried over from a previous year, and I produced 40,000 tons, which is a lot. I'm going to say 400 tons, and I'm going to sell 300 ton. And that changes my ending inventory then to 600 ton. So it's just a worksheet. Again, it's optional. You don't need to be completing this, but if it helps you come up with your ending inventory, there is also a livestock inventory calculation worksheet that will help you work through and capture the livestock side of things. Now, your AgriStability supplemental information form, we have a guide for that. Any producer that is participating in AgriStability needs to supply us and give us their supplemental information. So whether you farm and report to Canada Revenue Agency as a sole proprietor or as a corporation, each entity needs to submit their supplemental information. And this is a guide that will walk you through step by step, section by section, and it explains how to fill it out. Sometimes there's a little example on what goes in each section, and you can just reference that. Again, have it beside you as you're going to be completing your AgriStability supplemental information form. So now we're going to walk through the completing the 2024 supplemental information form. We'll do an example as if you were a livestock and a crops producer, and we will show you how to complete the form. So first off, the SCIC ID number. So that is just the ID number that's assigned to you for AgriStability from SCIC. It is not your crop insurance contract number. That is a totally different program, and the two numbers are totally different. So make sure you put the correct ID number here. AgriStability PIN number, if you want to put that, you can enter that. And I had opened up the fillable form for this 2024 supplemental form, and then you can just click and type, and it fills in the form for you. Section 1, what's your information? Your name, address, phone numbers, email, that kind of thing. Contact person, if you want to be naming a contact person, you are basically giving your consent that that person can contact us and we can provide them information about your AgriStability or AgriInvest on your behalf. So a lot of people indicate their accountant as a contact person, or if you want a spouse or a sibling, it's up to you on who you name. If you want them to have a copy of the final statement, the calculation of benefit statement, just check off this box here. And then section 2, what's your profile? I'm going to be filing as an individual, sole proprietor. If this is for a corporation, you can check that off. I farm in, my main farmstead is in Saskatchewan. I've typed that in already. And on page number 3 then is the legal land location of my main farmstead. I'm just going to initially type in the RM number here in Saskatoon. That's where I'm located. And then you just go through and answer the questions and check off the appropriate boxes. So was 2024 the final year of farming? No, that wasn't. Did I complete a production cycle? Yes, I did. Should I be combined? No, I am not combined with anyone. I am not involved with any other farm operations. If I'm going to supply some supporting documentation, I can indicate that here. And then the bottom of page number 2, that's where you're going to be signing and dating it. And just note, when you name a contact person, make sure you sign the form, because then we will update our system according to who you indicated as far as a contact person. But we need your signature for that. So then on page 3, identification for the farming operation. So if you are involved in 2 different operations, that's where you would just indicate which operation you're submitting the supplemental information for. So the farm operation, basically, if you're involved in multiple farming operations, you need to submit the program forms for each operation and assign a different operation number for each one. So this one would be one of 2. This is my own, but if I had a second operation, for example, that both my husband and I, maybe we ran an operation farming my husband's family's land, and then that would be operation number 2. And then you would use that same operation number for the corresponding farms each year going forward. Are you involved in a crop share or a joint venture maybe? So you can just check those off. How is this operation managed? I checked off that it's a single farm and cash. As far as the type of accounting method that is used, my fiscal year end, I'm an individual sole proprietor, so my month end or my fiscal year end is from the 1st of January 2024 through to the 31st of December of 2024. If you're a corporation and you have a non-calendar year end, you would be indicating what your fiscal year is here. If this is for a corporation, you would name who the shareholders are and the number of common shares that they hold. If there's partners involved in your operation, who are you partners with? If I was in a partnership, I would indicate the percentage, and let's say it is a spouse that I'm in a partnership with, and it's a 50-50 split. So that's how I would do that one there. Okay, just going to delete that one out because I'm not in a partnership. Just to note, if you are filing as a partnership to Canada Revenue Agency, filing your farm income and expenses, then each partner is going to have to complete their own 2024 supplemental information form. So the 2 forms, the information is going to mirror each other. You're going to be submitting and giving us the numbers for 100% of the farming operation, because when we get your farm income and expenses from CRA, it indicates what the percentage split is, and our system will automatically separate it out based on those percentages. So these forms here, the supplemental information, you're going to be including 100% of all the numbers, crops, livestock, everything on the sets of forms for however many partners there are. Now on page 4 is where we're going to get into the details of my operation. So first off, has the productive capacity decreased due to a disaster? So for crops, I'm going to say no. I had a pretty good year in 2024. Livestock is going to be the same situation. If you did have that disaster on your farm, you could check off yes, and you can even include a note of explanation as far as what happened, whether severe drought or severe flooding, and whatever the scenario might be. Even just put it on an extra piece of paper or jot it right down on the form here. Then when the verifier gets it at head office, then they kind of know what happened on your farm and they might not need to phone you with some extra clarification questions. Crop insurance. So if you are in a crop insurance contract, we need to know what that contract number is and my share of that contract. So I have 100% of the share of that contract, but maybe I share it with my sister and my brother. So then I would just give my third percentage of what I take from that crop insurance contract. So you need to make note of that. Now, livestock inventory. Excuse me. So once you get into your inventory numbers here, if you don't have any livestock, you just check off the nothing to report box here on the right-hand side. But if you do, you're going to reference that commodity code guide and you're going to look up your livestock inventory codes. Right now, I'm going to just use code 8000. Those are for the bulls, and I've got 3 of those. Now, price per unit, I'm going to supply a price for the bulls, just estimated average price of what their value would be. Price per unit for both livestock and for crops. If it's a common commodity, generally speaking, we track those prices. We talked about the fair market value prices. So that's the price. We do have those prices, but if you have a unique livestock or unique crop, on the crop side, maybe your organic livestock, maybe your purebred breeder, and then you can supply those prices for us, the price per unit. We would need that estimated price. So continuing with my livestock inventory, I also have some cows, and I've got 100 of those. And at the end of my fiscal year, I'm completing, this is as of for my ending inventory. That's as of the 31st of December. I'm filing to CRA as a sole proprietor. My fiscal year end is the end of December. And what animals, what livestock do I still have on farm at that date? So I do have some feeders. I've got some steers here. I've got 20 of those in that weight category. And I also have some heifers as well. And I've got 15 of those. Okay, so that's my livestock numbers. Now, my crop inventory and productive capacity. So I do have some hay. I typed this one in already. I did large bales. I had 200 acres and I produced 350 large bales. And at my ending inventory as of the 31st of December, I've got 340 bales left. I just started to feed these ones before year end. And then I've also have some green feed. And I did large bales for those too. I had 120 acres. I produced 150 bales, and I still have those on hand as of the 31st of December. Then on my crop side of things, I did seed some canola. Again, you can report it in tons or bushels. It's your choice. I'm going to do tons, 175 acres. I took off 140 ton. And my ending inventory for my canola, number 1, you need to separate it out by grade and indicate any different grades between crops because of the price difference. I have 160 ton. I still had 20 ton carried over from the previous year, so that needs to be included in your ending inventory. I also had some sample canola, and it's part of that same 175 acres, but I took off 10 ton. I sold it right away because it heated. I took it off. It was a little too green, so I wanted to get rid of it. I didn't want to try to store it. So ending inventory for my sample canola is a 0. Then I do have, still on farm, I have some number 1 wheat. Again, I didn't seed. It's not tied to a specific acres. I've got 13 ton. It was clean seed that I had from a couple years ago. It's still on my farm. It is still part of my ending inventory. It needs to be reported here on the supplemental form. And then this year I also did wheat, and I got number 3 grade for it. I had 220 acres there. I took off 120 ton, and I still have that wheat on hand. I haven't sold any of my number 3 wheat yet. And that's my crop. So if you do have pasture acres, you can put them in here. If you do have some summer fallow or unseedable acres, if they were too wet or too dry, you would include it in here as well. Now, livestock productive capacity. So that is the number of, in my situation, I've got beef cattle. So it's the number of cows, it's the number of females that would have birthed. So how many cows calved, or how many cows were you hoping to calve, whether that calf dies or not. So for my scenario, I'm going to say I had 97 cows that I expected to get calves off of. Okay. And then on page number 5, the feeder side of things. So you're not going to include any calves born in the program year in this category here. It's animals that maybe you had from the previous year, or maybe you bought some feeders during this year. So the key is they need to have an appreciable gain of 200 pounds, of at least 200 pounds, and or a minimum of 60 days within the fiscal period. So maybe I did buy some feeders early in 2024, grassed them, and then sold them in the fall. And for that one, let's say I'm going to have 27 of those. Then we're going to get into the accrual adjustments. So did I have any purchased inputs? Actually, yeah, I did. I pre-bought some canola seed, and $30,000 worth of that. It's not going to be used until my 2025 crop year. So I need to let AgriStability know that that was a prepaid expense. And I also pre-bought some of my fertilizer, and that was at, let's say, $50,000. Did I defer any income? I actually did. I sold some of my calves, and I deferred those into 2025, $100,000 there, and I did sell some of those feeders, and I got 50,000, or deferred 50,000 of that income into 2025 tax year. Any unpaid expenses? The only thing I still owed money on actually is my crop insurance premium from 2024. And again, just the dollar amount. That's all that's needed. If you don't have anything to report in these categories, you just simply check off that box, nothing to report. Okay? And then page 6 and 7, they're just extra rows. If you need more space to give us some of the detailed information of livestock or crops, page 7 is for any of the purchased inputs, deferred income, or unpaid expenses. Then you've got the space here on page 6 and 7, only if you need them. Okay? And that's the supplemental form. It's completed. It's ready to be submitted and sent into SCIC, AgriStability at head office there. Okay? Now, I mentioned that everyone who reports farm income and expenses, whether they are a sole proprietor or a corporation, needs to complete the supplemental information form. Now, for corporations, they need to be completing the corporation's form because that captures your farm income and expenses. It gets completed and sent to us. It is sent to SCIC AgriStability because that is sent electronically to Agriculture and Agri-Food Canada that will drive your AgriInvest. So we need the corporation's form completed. So we capture that farm income and expense. First couple pages are very similar. Name, address. Are you naming a contact person? This is going to be for a corporation. Let's say, what's the business number of the corporation? And at the bottom of page 1, you're going to check off this application is for AgriStability and AgriInvest if you're in both programs. Maybe you're in AgriInvest only. You're not in AgriStability. You still need to submit the first 5 pages here so that we capture that farm income and expenses. So continuing on to page 2, again, land location. Are you going to include any extra information, receipts? You're going to sign and date it. Identification of the farming operation, crop share, what's your fiscal year end? How's the operation managed? Is it a single farm or a partnership? Maybe this corporation is in a partnership with another corporation or an individual. And then you're going to list your commodity incomes. So the commodities that you've sold or any program payments that you got, that allowable income portion, your other farming income. And then on page number 4, your expense side of things, those commodities that you've purchased, the canola seed that you've bought, the allowable expenses, your chemical, your fertilizer, your vet fees, your freight and shipping. Those dollar amounts are going to get captured here, and the non-allowable expenses are noted on the right-hand side. Then on page number 5, your statement of farming activities, who the shareholders are of this corporation, and are there any partners? Is there a partnership involved with this corporation? So that captures the farm income and expenses for your corporation that gets sent to Agriculture and Agri-Food Canada. But it needs to get submitted to us here at SCIC AgriStability. Then page 6 through 9, it's the supplemental information. So it's the exact same form that we walked through. What's your livestock inventory, what's your crop inventory, and any accruals. And you can just complete section by section, and then your form is done. You could send it in to us. So once we have all of your information submitted, all the forms have been completed and sent in, your file is processed at head office by a verifier. And when the file is finalized, the end statement is called the calculation of benefits statement. And that's what we're going to go over now and review. So you get the first couple pages mailed to you, and it details what the reference margins are, the program year margins, and whether you're in a benefit or not. Now, if you want to see the entire statement of your calculation of benefits, it ranges between 7 to 12, 14 pages long, depending on the size of the operation. But all of those other pages you can view through your Ag Connect online portal, or you can contact our AgriStability call center or your local SCIC office, and they can get you a copy as well. But the first 2 pages that are mailed to you, page number 1 details the reference margin came in at 392,780, and your program year margin $575,024. The trigger point, whether you're going to be in a benefit or not, is 70% of the reference margin. So 70% of the 392,780 is 274,946. Your program year margin is well above that. There's no decline, $0 and 0 benefit that's going to be paid. Page number 2 details where these numbers came from and showing the reference margin history. So this producer, the program year on the far right-hand side column, the program year margin, we look at the allowable income, the allowable expenses, those accrual adjustments that we talked about, and the program year margin calculates out at the $575,024. Now, historically, we have a full 5 years of history. We do the Olympic average, so the low year of 2022 and the high year of 2023 are dropped, and the remaining 3 years are averaged. You can see there in bold highlight here. So the reference margin, those 3 years averaged, comes in at through 392,000 $780. And that's what is summarized on page number 1 here. Okay, that's your calculation of benefit statement. Now we're just going to touch on AgConnect. I've talked about it a couple times here. You have 24/7 access to it. You can eliminate any kind of paper. You can complete and submit your program forms online through this portal. If you're new to AgriStability and it's your first year participating, you will need to submit your program forms through on the forms themselves, whether faxing them in or sending them in to us. And then your second year, you will be able to submit your information to us through AgConnect. You can look at your historical information. You can look and see, did I pay my fees? Maybe you can't remember. On AgConnect here, you'll be able to look and check that out, as well as that complete statement of your calculation of benefits is viewable as well. When you first come into your AgConnect account, this is the home page. This is your welcome page. The blue menu bar on the left, that is year specific. So if you've been in the program for a number of years, you can go back to that year and select, what the program fee was, what the calculation of benefit statement was for 2022, let's say. Towards the top of the menu, submitted files. You can go in there, and if you can't remember, did I send my program forms in? You can check there, and it'll show you what forms have been submitted and maybe what forms are missing. And then once you are able to submit your information to us through AgConnect, year specific, you'll be able to click on e-forms with the current program year that's active. You'll be able to click on e-forms and then submit your information, your supplemental information. Click submit. It automatically preloads right into our system. You don't need to send in forms, and nobody needs to be keying it and taking those extra steps. Just some important deadlines that we want to highlight. March 31st, that is the deadline to submit the interim application for the 2024 program year. And again, that application is optional. April 30th, that's the deadline to enroll in the AgriStability program for the 2025 program year. If you're new to the program or have been out for more than 4 years, you can request a new participant package by this deadline. And also, it's the deadline to cancel participation in the program year. You'll need to pay your program fees without any kind of penalty by April 30th. So if you are currently a participant in the program, the enrollment fees for the 2025 program year, they get generated in February and mailed out. So the deadline to pay that fee without any kind of penalty is April 30th. After April 30th, there is a 20% penalty added to that fee amount. You also have, if your enrollment notice is issued later on, you'll have 30 days from the date of your enrollment fee notice to pay that fee without any kind of penalty. June 30th of 2025, as mentioned earlier, that's the new deadline to be submitting your 2024 program forms without any kind of penalty. And the final date to submit the 2024 AgriStability program forms with penalty added is September 30th of 2025. Now, the penalty again is not applied if there is zero benefit being paid. And then December 31st of 2025, that's the final deadline to pay your enrollment fee for the 2025 program year with the penalty added. And if you want to be reaching out and contacting us, here's our toll-free numbers and emails. Toll-free number on the left, that's for our all of the other programs that SCIC administers, and our customer service email. AgriStability has their own toll-free call center. There's the toll-free number there and the email for AgriStability at head office. Thank you for joining us, and if you have any questions, please reach out.